let's get started by discussing how to apply the Fibonacci indicator to your chart. So if you go over here to the left-hand side of the chart, you're going to see this area that is used for all different types of tools. It should be the third menu down, and you're going to come down to Fibonacci retracement, right? So there's going to be trend-based fib extension, there's going to be trend-based fib time zones, all these different Fibonacci things. You want Fibonacci retracement. So I'm going to go ahead and click Fibonacci retracement, and then you'll just simply draw her. You'll click, you'll pull, and then you will click again, and it will lay her on the chart. And here you are, you have your Fibonacci tool. Now, when you first get your Fibonacci, you're not going to have the numbers that are important. So you're going to want to right-click, format, and adjust your fib levels to what you need. So you're going to want the 0 level, the 23.6 level, the 38.2 level, the 50, the 61.8, the 78.6, the 1 or 100, and then you're going to want to create this level here. It's negative 0.618, and you're going to want to create negative 0.272. So these are the fib levels that we here at New use for our chart analysis. And the way you do this, guys, is make sure you put the 0 point and then put the fib level, because these are percentages, and percentages converted to decimals are written like this. So that is how you will format your Fibonacci indicator. Likewise, you could also come up here to indicators and type in Fibonacci retracement and pull it up, but it's much easier to just do it over here from the left-hand side. Now that you know how to apply and adjust your Fibonacci indicator for trading, let's look at how we're actually going to apply Fibonacci to the chart. So essentially what Fibonacci is, it's a series of golden ratios that we see throughout nature, and we see naturally in the markets. It's been proven time and time again that the market follows Fibonacci ratios, and large institutional players will come into the market at Fibonacci retracements. This is what often creates the validity in our trend lines and channels, in our market structure, etc. So we're going to look at how to apply Fibonacci, right? So essentially the way Fibonacci works is you take one point in the market, and then you take another point in the market, and you connect the two, and you look at the Fibonacci ratios between the 2 points. So let's say, for instance, I wanted to look at the Fibonacci point between here and here, right? So I would take my Fibonacci tool, I would click down here at the very bottom where the wick is, and I'd come up here to the very top, again where the wick is. I'd start here, and boom, drop it, and see what the retracements look like in this area. Now, because you can do this with practically any 2 points on the chart, the key with Fibonacci is going to be finding the correct points to apply your Fibonacci indicator so that you have an accurate understanding of what levels the market is respecting at any given time, right? Because if you draw your Fibonacci incorrectly, then you're going to have the wrong levels marked on your chart, the wrong extensions, the wrong retracements. Everything is just going to be off, and it's going to make trading extremely difficult. So the key with Fibonacci is using confluences to find the correct levels. So I'm going to go ahead and delete this off here now and discuss how we're going to do this. So essentially, the way you're going to be using Fibonacci in your trading is you're going to be using it for swings. So you guys are going to need to think about structure here. So just a quick recap on structure, right? If we are in an uptrend, we come up, we retrace. We bust through this, and then we retrace anywhere between this area here and this area here, right? So we can retrace here. Then we come up, then we retrace. Well, the idea is that each of these retracements is likely a Fibonacci retracement zone, okay? So what we're going to look at in the market are these swings, and we're going to apply our Fibonacci on here to add confluence to our trades, right? So a great example is over here, right here in front of us, right? We are in a clear uptrend. So I'm going to go ahead and mark this with my channel. I'm going to mark this uptrend here and pull us up. So we're in a clear uptrend. Now, you have this uptrend marked by this time, right? You don't have your channel up here. You have your channel like so, but it's still in an uptrend, so it's not going to affect the way we apply these Fibonacci's. So you have the swing, you are in bullish structure, and you are in a bullish channel. You're coming up, and you're down here in this area. And your job is to figure out where we should see the market reverse. Well, what you're going to do is you're going to take your Fibonacci tool and you're going to come down here to the bottom of this swing where the swing began, click, and then drag up to the top where we saw the swing go. And you're going to pull it across. And you're going to use this to figure out where the market is likely going to be reversing from. Now, the key with these Fibonacci's is that once you understand that you're using market swings to draw them, the accuracy of your Fibonacci trading is going to increase dramatically. However, because Fibonacci can be drawn from either the bodies or the wicks each time, similar to the way trend lines and channels can, it's going to be extremely important that you use confluences to figure out what the correct levels are before you trade them. So a great example right here, I have it marked at the body, and we haven't discussed this yet, but the 61.8 retracement is the most popular retracement outside of the 38.2 retracement. So I noticed that when price came down, she wicked, and I'm going to zoom in here, she wicked through the 61.8 level. Now, it's still a rejection from the 61.8 level, but notice how if I come up here to the top and I align the top of our Fibonacci sequence to these bodies up here, right? Look how much better it aligns with this rejection, right? So moving forward, after seeing that price bounced off this level, I'm going to be looking at these Fibonacci levels for my extensions, which we will get into later. So let's take a couple minutes here and let's look at some examples of applying the Fibonacci correctly to the chart. So let's come right here. We are moving up, and then we start to come down. You guys will apply your Fibonacci like so, and boom. So you use the top up here, the bottom down here. This is our swing, and you guys can see it came down to a retracement and then flew up. And that's how you would mark this swing. Now you have another swing. So when you're using Fibonacci, you'll come here to the bottom of the swing here, come all the way up to the top, and boom, here is the Fibonacci for this. Now we fly down all the way down, right? And we're coming back up. Now your Fibonacci will look something like this. Boom, down here to the furthest point. Now your job is to look at the price and see how it reacted here to determine if your levels are correct. It's going to be extremely important moving forward, right? So again, if we're looking at this move up right over here, right? Up, down, that's how you're going to be applying your Fibonacci sequence. So if you guys can see, and I'll mark it like this here and maybe make it clear, up, down, up, down, up, right? Those are your Fibonacci swings, right? So your Fibonacci swing is here through here. That's your Fibonacci swing. Fibonacci swing down here was from here to here. Get rid of this one so it becomes a little more clear, right? This was your Fibonacci swing. You guys can see that this pair loves to bounce off the 50 mark. Very popular for UJ. She loves the 50% Fibonacci pullback. Coming over here, right? We're coming down. We are in bearish territory. We have a trend line coming up, right? We are completely bearish. So watch, we have structure. She comes down and she comes up. She comes down. She comes up. So how are you going to be using your Fibonacci? Going to start here, pull down through this wick here, and look at the retracement. Again, 50%. It's like magic. Delete that. The next Fibonacci pullback, you're going to start here at the top of the swing, come down here at the bottom of this, pull it across. Boom, again, 50%. It's like magic, right? That is how you guys are going to be applying the Fibonacci to your chart. So if you're looking at this and you don't have clear swings, don't use it, right? Don't use it. All right, look, coming over here to the right, is this not a clear swing? You were coming up, you came down. Yes, there are swings in between here. Of course there are swings in between here. I'm showing you guys, if you can identify swings, this is how you will apply your Fibonacci. Boom, down here, come up to the top of your swing, pull across. Boom, that's your Fibonacci, 38.2 retracement. She went up. This is how you apply it, guys. Even over here, when you have something extremely volatile like this, we came up, and then we came down, and then we came back up, right? Our Fibonacci sequence began here, pulled up to the swing high, and you guys see the retracement here, rejected from 61.8 and went up. And that is how you guys are going to be applying the Fibonacci. Now, this was just meant to give you guys an introduction to understand the principle behind how we're going to be using the Fibonacci's in our charts. In the next few videos, we're going to go into more detail. We're going to talk about how to use the retracement ratios for your trading and the extensions for taking profits. And finally, we're going to tie it all together and show you how to use it in your live market trading. Fibonacci is one of our favorite tools in the market. So we hope you guys enjoy these trainings. And